Good morning, my name's Carol Harmer from the International Trading Institute. Most of you know me as from Charmer Charts and Charmer Trading. What I'm going to do today is have a quick run through the US stock markets, because they're looking to me to be a little bit interesting, and obviously we want to make the most of a move. Now, normally on a Monday you can set up your trading strategy for the week. You know, hopefully you've done all your homework on the Sunday and you've got your daily, weekly, monthly pivots all written down or placed upon your chart. But I like to do a trading strategy, or used to do a trading strategy that would take me up to reversal Thursday. Fridays isn't a great day to trade. Everybody's closing out their positions and it gets a bit wacky. Alright, but there are a few interesting things in the US stock market. So I'll take you over there now. Now, with these stock markets, okay, I love to eyeball a chart. I find nothing better than to actually look at a chart and think, where's it going? Not looking at indicators, not looking at anything else, just the basic chart pattern. Now, in this chart, there is nothing at the moment that would suggest that the market will come lower. However, that gut feeling that most traders get when you're looking at something like this, you're looking at it's gone up, it's quiet, it's making not a real difference, it's not doing much. And for something then where you go along and you have diverging indicators across the board, then, you know, maybe that's well, it's not maybe, that's a case to go, whoa, hold up, there may be something wrong with this market. You may be finding that, like I'm seeing, is that it's running out of steam. Now, when I say it's running out of steam, I don't mean that the overall primary and secondary trend is finished. I don't mean that at all. I mean that at this moment in its little life, the chances are that it's going to correct. And as we know, markets go up by the stairs, down by the escalator. And what happens is you see a lot of traders get caught the wrong way round. So let's take another look and see where we would be wanting to sell this market. If I go across to here again, now obviously I love looking at pivot points and I love looking at markets. At the moment, we're looking to turn on the stochastics, so watch that, okay? For those of you who don't understand stochastics, I will explain them all on the course, but for the time being, it's when the blue line goes below the red line. Also, you can feel that the market is running out of steam, okay? And what makes a great trader is gut feeling. I mean, I will back that all the time. And contrarian trading, I mean, you would see at the moment all of these markets, you think, well, they're in a bull trend, nothing, why go against it? You're not going against the trend. What you're doing is you're picking up points for when it retraces. So at the moment, we're trading at 6412, okay? So you want to buy it, you're buying it at 6413, you want to sell it, you're selling it at 6412. there's nothing nearly, maybe 6,430, maybe 6,330. That could be one. But what I would look at today is if we don't break today's high of 6,429, please take that as a sign that the market's going to come down. All right, you might only get a few pips down to these moving averages here. Okay, confirmation would come on the break of here. All right, this one here. So if you're looking at the 18-day moving average, you will see that once it does start to break down below here, we're going to go down quite a bit further. So keep your eyes on those, because they are, they are important. But to preempt the S&P, just look at the data. Just look at what it's doing. Look at the chart. Doesn't know what it's doing. Can't make its mind up. Up we go. But we're not making a consent. We're not making a sustained effort to break higher. We're not. So I'm looking at the market retracing for this week. Where do I see it retracing to? Short term, you can put on a little fib from there to there. And strangely, here we have our moving averages coming in with our 23.6. Again, the projected trend line is coming in at that level as well. So all eyes are going to be on this 6341, 6305, all this area here. But the way that you can trade it is preempt it, cover your shorts down at these lower levels, and resell below 6,300. That's what I would do. Now, obviously this is the S&P. I love the Nasdaq, so let's take a look at the Nas. Now, as far as I can see, if you look at the Nasdaq, it's showing the same pattern. And the Nasdaq is one of those markets that will lead us through it. The stochastics are beginning to turn. Again, we've got this little glut here. You've got this, I don't know where we're going, so we'll go up, but I'm not really sure. There's no oomph behind it. So we go on and put, again, fib levels on it. Okay, don't forget to do your daily pivot points. They're very, very important. I'm going to take that one. I'm going to take that up to there. And again, you can see that we are in this. You can see that, the market is reacting virtually the same as the S&P. We look around and we look at this level here, down around the 22982. You've got the fib coming in, the trend line, you've got below the 18-day moving average. If this starts to come down, what we're looking for, right, when we trade is low risk, okay? If you trade the high on the Nasdaq or the S&P, if you trade the high and it goes above it the second time, place your stops accordingly. Algo's like 20 to 30 pips, to get you. And you don't want to do that. So what you want to do is have enough leeway so that you don't get stopped on the I'm going to get you out and then crash. Or you can be conservative and wait until we break below that first 23.6 area. And if we do that, where are we going to come down to? Well, if you look at all the indicators, which you can't because they've all disappeared, but if you did, you can see that you can come right the way back down to here, okay, 22169. And if you look across here, you can see that the market never went really above that. So that would be a really good retracement area where you could reinstate, you know, take your profits on your short positions and maybe go a bit long, looking at what the market's doing. All right, that's the key. Now, obviously, Mondays is a very quiet Monday mornings, you know. I'm with the Boomtown Rats. I don't like Mondays either. But it's when the states come in, which we haven't got too long to wait now, they will take up the direction. Wall Street will take up the direction. But what I want you to be aware of is the US stock markets are not looking great at the moment. Okay? You may find over the next couple of days they try to rally, but be always on your guard for where am I going to take a short position? Okay? Where am I going to go short? Because you don't really want to be long of this market unless it goes sideways, eases the overbought scenario, we then think again. Exactly the same as what we did last week. Okay, well I'm glad we've got that out of the way then. Okay, so when we post this to the YouTube channel, what we'd like you to do is just like and subscribe so we know how many of you are visiting it, how many of you are seeing it, and I will try and do gold. I think I'll have a look at gold and silver this afternoon. Alright, good luck for this afternoon. Take care, and I will catch you tomorrow.